The local bourse has had a three-day winning streak. Investors cautiously optimistic that Euro policymakers are headed in the right direction. I spoke to Ken Howard from RBS Morgans a little earlier. Well, Ken Howard, a solid enough rally, but am I right in thinking still a level of caution there in the market?
Yeah, it was pretty much across the board positive start to the day, but then there seemed to be some areas of weakness turning up in the market, and maybe some of that has to do with the softer PMI number coming out of China. But there was weakness in some of the iron ore stocks like Fortescue and some of the energy stocks as well. But generally a positive day on the market, and it was a good to see.
Financials were the best performers on the day, and I see Commonwealth Bank is at a 2.5-year high today.
Yes, it's very good to see. Commonwealth Bank has been a great Australian success story. The dividend that they should be paying this time around is a good 30% higher than what they paid in 2007. So even though the shares are at a 2.5-year high, they're still about 10% below the highs reached in 2007. But with those growing dividends and a market thirst for stable income stories, I think we'll see the Commonwealth Bank trade higher in the next 6 to 12 months.
Now, a takeover battle is hotting up in the iron industry for Northern Iron. Now, given iron ore prices have been in retreat, what makes Northern Iron attractive to one bidder, let alone two?
Well, I guess it's a story you often see around the market, and Billabong's probably a good example, where companies that are out of favour, businesses that are being challenged by prevailing conditions, often wind up being the prey. And I think that's what we've seen with Northern Iron. It's a fairly small iron ore producer, a couple of million tonnes a year. It really doesn't have the strongest balance sheet, although it does have net cash, but just not enough cash or cash flow there to fund its ongoing expansion programs. Of course, it can borrow money to do that, but I think that makes it vulnerable. The share market too is a bit sceptical. The share price is about $1.15 today, and the takeover price is mooted at $1.40. So a few investors cautious.
And finally, talk that Echo Entertainment and Crown might be looking at a joint venture to market to high rollers. What's behind that? Who's edging those two companies closer?
Well, I think there's a couple of things going on there. Obviously, James Packer can see the benefits of the casino operations with his big stake there in Crown, and if there's going to be some benefit in bringing the two casino operations together, it is going to be around that marketing and cross-selling to the high rollers. So the opportunity to offer to high rollers come to Australia. You can stop in at Jupiter's in Brisbane, Star City in Sydney, and down to Crown in Melbourne, I'm sure, is one of the marketing strategies they'll use. Equally, loyalty and bonus programs, I'm sure, is something that the casinos will use. But with Genting, the big Malaysian casino operator, also having a look at Star City, I can imagine that Crown is pretty anxious to do something to tie up the two businesses.
Yes, perhaps a rather strategic move. Ken Howard, thank you very much for joining us.
Thank you, Tiggy.